Investing looks like a path to financial freedom. On the surface, it feels powerful. John opens his investment app on his phone, and the screen lights up his face in a dark room with green numbers, red numbers, and moving lines. John smiles slightly because he feels in control, but deep inside he is not completely sure. He slowly realizes that investing is not just about money, it is about surviving the invisible traps that slowly drain wealth without people even realizing it. The market screen glows in front of him while charts move up and down like breathing. He remembers what he saw earlier on social media where someone claimed they doubled their money in a few weeks and another person said they became financially independent through crypto trading. John starts questioning himself and wonders if he is doing something wrong. Maybe he should buy more stocks or take bigger risks, but this is exactly where most investors begin losing, not because of the market but because of emotions. Sitting in his chair, John remembers his first investment mistake when he bought an asset simply because everyone around him was excited. Friends were talking about profits and influencers were showing success stories, and he did not want to feel left behind, so he invested quickly. A few weeks later the price dropped and John experienced fear, the same fear many investors feel. That fear pushed him to sell at a loss, and later the price went up again, a painful lesson that stayed in his memory. He learned that the market does not move based on emotions but on collective behavior. Investing is often presented as simple with the idea of buying low and selling high, but John is starting to understand that most people actually do the opposite. They buy when prices are high, when hype is everywhere, and when they want fast success. This is the fear of missing out, one of the biggest wealth killers in modern investing, because hype always ends but losses can stay in someone's financial life for years. John opens his notebook and writes one sentence: "Patience is more powerful than excitement," and he underlines it twice because he is beginning to understand that real wealth does not grow fast, it grows slowly like a tree where roots grow first, then the trunk becomes strong, branches spread, and only later do fruits appear. Most investors want fruits immediately, so they jump from one investment to another, paying fees, paying emotional costs, and reacting to market noise without giving any strategy enough time to succeed. Suddenly another notification appears on John's phone about a high-leverage trading opportunity promising big profits, fast money, and a low initial investment. It looks exciting, but John remembers something he read: leverage is like driving a fast car on a rainy road where you might reach your destination quickly but you can also crash much faster. Many beginners think they are investing when they use leverage, but in reality they are taking emotional risks under borrowed pressure, and pressure almost always leads to bad decisions. John closes the notification and decides not to rush because he is learning that investing is not about speed but about survival. The longer someone stays in the market, the more opportunities they receive. When John checks his portfolio, he notices something interesting. Some investments are up and some are down, yet overall the portfolio is stable because he started diversifying his investments. He learned that putting all money into one asset is dangerous since markets change, technology evolves, and economies shift. Diversification does not guarantee profit, but it protects against catastrophic loss, and protection is just as important as growth. John also remembers another mistake he used to make: constantly watching market news. Every update made him nervous, negative news caused panic, and positive news made him overconfident. Now he understands that news is not always designed to help investors, sometimes it is designed to trigger emotional reactions because emotional investors trade more, and trading more often means paying more fees. Fees look small individually, but over time they slowly reduce profits like water leaking from a container, something you do not notice immediately but eventually leaves the container empty. Leaning back in his chair, John thinks about social media again and remembers the luxury lifestyles, expensive cars, beautiful vacations, and screenshots of profits people post online. Now he understands something most beginners do not realize: people rarely post their losses. They show success, not struggle, victory, not failure. Comparing your real journey to someone else's highlight reel is dangerous. Looking at his long-term investment plan, John makes a simple decision to invest regularly, ignore the noise, and remain patient. He realizes that consistency is more powerful than talent in investing because someone who invests small amounts regularly can often outperform someone who makes occasional risky bets. Consistency removes emotional decisions, and emotional control is the real key to investing success. As the night becomes quiet and the room stays dark except for the glow of the screen, John thinks more deeply and understands that investing is not just about money but about behavior. The market does not reward intelligence alone, it rewards patience, discipline, and the ability to stay calm when others panic. The real enemy of investors is not the market but themselves, their fear, greed, impatience, and desire for fast success. John closes his trading app and feels calm, not rich but calm, and that itself feels like progress because real wealth building is not about one big victory but about thousands of small decisions made correctly and repeated over time quietly, patiently, and consistently. The next morning John makes a final decision that he will not chase every opportunity or follow every trend, he will focus on long-term growth because he now understands one powerful truth: investing is simple to understand but difficult to master. Most people keep losing not because they are unlucky but because they want success too fast. John smiles slightly, knowing his journey is just beginning, and he is finally ready to invest without losing himself in the process.